Welcome back to this week's market update. Today is Friday, October 13th, 2023, and we have a lot of updates, so let's jump right in. This week was characterized by inflationary data as well as the start to third quarter earnings season, along with a lot of geopolitical updates in Israel and Palestine. Despite the events, equities ended higher for the week as of Thursday, October 12th, with the Nasdaq Composite gaining 0.67%, the S&P 500 gaining 0.3%, and the Dow Jones Industrial Average gaining almost 0.1% for the week. As I was saying, we had a lot of updates in inflation this week with PPI and CPI both coming out for the month of September, and we'll just head right in here. So, PPI came in hotter than expected with annual PPI inflation at 2.2% year over year, while core PPI at 2.8%. So, a slight increase in headline and a slight decrease in core there. On a monthly basis, this amounted to a 0.5% increase in headline and a 0.2% increase in core, which marked the lowest month-over-month increase since June. Here you can see. So, a bit of a downtick in month-over-month inflation. However, it is an uptick in annual inflation. Driving these prices higher in September were energy, which was up 3.3% month over month for producers, as well as food, which was up 0.9% month over month, and trade, which was up 0.5% month over month. On the other hand, we saw transportation and warehousing costs actually down 0.4%, which is really interesting given that oil prices have spiked so much in the recent months. So overall, this is what we've seen in PPI, and we'll head into CPI next. Along with the producer price index, the CPI came in hotter than expected as well at a headline rate of 3.7%, the same as August, and a core CPI rate of 4.1%, which was down slightly from August numbers. On the other hand, we saw monthly inflation at 0.4% for headline CPI and 0.3% for core CPI there. So another month of moderate inflation, however, still quite a bit above that 2% target that the Fed has. Behind these CPI numbers, you can see energy led the largest monthly increase in prices, up 1.5% month over month, alongside transportation services, which were up 0.7% month over month, and shelter costs, which were up 0.6% month over month. And here you can see those shelter costs, a huge chunk of consumers' wallets here, up 7.2% compared to a year ago. So lots of stickiness in the rental and homeowner markets there that are keeping prices higher for longer. On the other hand, we saw used vehicles down 2.5% month over month, as well as medical care commodities, which were down 0.3% month over month there. So overall, really interesting story in the inflationary picture, seeing inflation come down, and we'll get into that the next slide here. So looking at the bigger picture of where we've been in inflation and where we are now, here you can see most of the measures of inflation that we have between CPI and PPI for the month of September. We'll get PCE in a few weeks here, but these measures are kind of hovering in between the 2 to 4% range, depending on which one it is. And we've made a lot of progress since the early 2022, summer 2022, when we had 11% inflation in the PPI and 9% inflation in the CPI here. Made a lot of progress since then, a lot of rate hikes that has helped prices come lower. However, we still are quite a bit above that 2% target, which would put inflation around here. So really interesting stuff. We'll continue to track closely with inflation and keep an eye out for it. This week marked the first week officially of Q3 earnings season, with the big banks like JP Morgan kicking off the earnings on Friday. At this point, we have 5% of the S&P 500 reporting here, and 84% of them have beat earnings estimates to an average surprise of 6.7%. So overall, going pretty well for the S&P 500 so far. Only a little bit of reported companies. We'll continue to watch this closely. When we look at the sectors that have been performing well so far, we've seen consumer discretionary actually show an over 40% year-over-year increase in earnings. Again, this is only 7 out of 52 of the consumer discretionary companies that the S&P 500 tracks, but that is a good sign that consumers are still spending in this last quarter for sure. We also saw industrials up 23% in earnings year over year. So definitely not in an industrial manufacturing recession. When we look at numbers like this, again, only 7% of those companies have reported though. So we'll have to keep a watch on that. Another thing we've seen, technology, none of the big companies have reported yet, but we have seen that down 20% year over year. Only 6% of those companies reported so far. So we'll continue to keep an eye on earnings in this earnings season and report back. Final update of the week, we got a 7.5% month-over-month drop in consumer sentiment in the University of Michigan's Consumer Sentiment Index for the month of October. Big drop over here in how consumers are feeling. And the biggest reason they've cited for this is rising prices and continual inflationary pressure impacting their household finances. And we've seen that in the CPI this week, still with a CPI towards 4% year over year, almost twice the Fed's target. So that's really interesting there. We also saw current conditions fall 6.6% in 1 month here, as well as expectations fall 8% in October as well. When we look at it compared to a year ago, sentiment was up about 5.2%. So you can see here we were in a much worse place in terms of sentiment conditions and expectations in all of these metrics for this survey. And we also saw that current conditions were up 1.7% from a year ago and expectations were up 8% from a year ago. So in a much better spot overall in terms of sentiment compared to last year. And some of this can be attributed to kind of the bear market that we saw in the third quarter, fourth quarter of last year, and how we've had a much better equity run so far this year, despite some volatility. So we'll continue to watch out for how consumers are feeling as we look into this really interesting macro landscape. So that concludes our updates for the week. Thank you so much for tuning in, and we hope to see you next week.